Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, what a remarkable rebound it was on the index yesterday. 22,100 has been reclaimed and we're comfortably above that level. But whether or not we manage to sustain those gains or extend those gains is something that we'll be watching out for. For now, the GIFT Nifty is hinting at a positive start. And of course, 22,300 seems to be, a crucial level to watch out for on the upside, beyond which the Nifty can in fact retest levels of 22,600 or 700 on the upside. Of course, the Nifty Bank Index also 48,002. That's the 20 DMA, and that's the next level to watch out for on the Nifty Bank Index after yesterday's up move. That was 800 points. The recovery came in from the day's low on the Nifty Bank Index. Of course, lots to watch out for in terms of stock reactions. Hindalco Novelis has filed papers for IPO. That stock will be in focus. You have Vedanta, that will be in focus, Airtel, and of course you'll be watching out for the street verdict on Zomato after good numbers. Lots to watch out for, and of course all your stock related queries will also be in focus. Keep them coming in on our YouTube feed. Of course, try and send them in before 9:15 so that we can take them up with our technical expert. And of course, we will try and get them answered for you. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Dow snapping its 8-day gaining streak. However, the Nasdaq outperforms and ends in the green. Asian markets are largely higher, while the GIFT Nifty is suggesting a positive start for the Indian market. Oil prices rise with the Brent edging back above $83 a barrel as the outlook on demand improves. And in fact, gold has rebounded after a bout of profit taking ahead of US inflation data that will be released tomorrow. April CPI cools to an 11-month low of 4.83% in April. In fact, core inflation eases even further to 3.5%. However, experts say that the RBI is unlikely to cut rates unless there is a sustained drop in prices. Among key earnings to track, Bharti Airtel will be reporting fourth quarter numbers today. Average revenue per user may grow 0.4% on a quarter-on-quarter basis to somewhere around 208 rupees. And from the broader market, watch out for numbers from the likes of Shree Cements, Siemens and Colgate-Palmolive. And search and rescue operations continue at the site of the hoarding collapse in Mumbai following yesterday's dust storm. The NDRF has rescued 74 people, while 14 people have lost their lives so far. The Mumbai police has also filed an FIR against the owner of the illegal hoarding. Well, 10 minutes to go for the markets to open. Of course, we are looking at a positive start this morning as well after the steady or smart rebound that we saw from the day's low yesterday. So the Nifty spot shut shop above that 22,100 mark, up 0.2%, but it was a fairly remarkable recovery from the day's low because we had in fact slipped below that 21,850 mark as well at one point in time. It was a 1% recovery from the day's low, with mid-cap index recovering somewhere around 2% from the day's low. Volatility index, however, continues to spike another 12% up move. In fact, in the last 13 sessions, the volatility index has almost doubled rather, 20.5. That's the level it's at the current juncture. Nifty Bank, of course, had recovered 800 points from the day's low. Pharma and metals, these were the top performing sectors yesterday. And, looking at the FNOQs, the open interest on the Nifty, was down 0.7%, shed somewhere around 80,625 shares. May futures trading at 97 point premium vis-a-vis 85 point premium in the last session. Nifty Bank open interest was down 3.7% and it shed somewhere around 88,700 shares or thereabouts. The Nifty put call ratio has jumped to 0.96 vis-a-vis 0.91 in the previous session. And if you're talking about the stocks in ban, Piramal Enterprises is the new entrant in the ban list for today. And still in ban will be stocks like Balrampur Chini, Canara Bank, GMR Infra, Hindustan Copper, Vodafone Idea, SAIL, PNB and Z. Of course, in terms of stocks to watch out for, Vedanta will be in focus. It will be mulling a fundraise via FPO or rights issue on the 16th of May, and also in focus will be Shriram Finance. It will be selling stake. In fact, it will be selling its housing finance arm to Warburg Pincus. Of course, in focus will also be DLF after its numbers, strong numbers. JSPL also will be in focus because it has reported a 100% jump in profit, although it is still a shade below street estimates. Demand has been robust, and which is why we saw a triple-digit percentage gain in the profit. Of course, let's bring on board then our technical expert. For today, joining me is Aamar Singh of Angelone. Great to have you on the show, Aamar. Yesterday we saw a very good rebound from the day's low. Today, do you foresee the Nifty looking for stability at higher levels? 22,200. Would you say that higher levels are on the charts when it comes to the benchmark indices?
Yeah, very good morning, and thank you for having me on the show. So, see, what we've been witnessing in Nifty is that Nifty definitely is getting very strong support at the lower level. So if you look at the levels, 21,000, I would say 21,700, 800, that's acting as a very strong support zone, and we've seen the Nifty bounce back from those levels at least 3 times in the last couple of months. So that really tells me that that's a zone of support. Also, we are seeing that some of the heavyweights are also getting support at lower levels. So on the upside, however, the way markets rallied, almost it was more than 300 plus points from the lows of the day yesterday. And so that tells me that definitely there is interest in the markets. And also we have to understand that because it's election season and election results are also pending and increase in volatility. So we are bound to witness such sort of movements in the markets. Having said that, I would say 22,200, 300 on the upside, or I would say rather put it at 22,300 to 400 on the upside. That should act as a very strong zone of resistance, because on the intermediate term charts, on the short term charts, there is clear consolidation which is happening. The long term charts, the trend remains strong and positive, but on the intermediate and the short term, we are seeing some sort of consolidation. That's the reason we are seeing these choppy trading sessions in the markets. And also, I would say lack of fresh positive triggers from global cues as well. So these are some factors which are really driving the Nifty or the benchmark indices.
Right, on the Nifty Bank index in particular, we saw an 800-point recovery from the day's low. Now in focus will be the 20 DMA level of 48,204. Would you expect that level to be tested in today's session?
So if we look at Bank Nifty, so Bank Nifty, if you look at the immediately, it's the constituents that actually driving Bank Nifty. So you've got ICICI, you've got Axis, you've got SBI, you've got Kotak Mahindra Bank, I would say HDFC Bank. So these are 4-5 banks which are driving, and there are mixed cues coming out from these banks. If you look at them from a charting perspective, if you look at Bank Nifty, there's clearly a top which has been formed on the daily chart. So that tells me that the upside is likely to meet with the resistance level, whereas on the upside 48,000. 200, 300, that's a zone of resistance where Bank Nifty would meet, because that has been a previous top. And if we go back in time, so earlier the previous top was somewhere around 46,600 levels. So now we are very clearly seeing that there are tops which are there on Bank Nifty, which needs to be scaled for any further upside move, because we are seeing consolidation on the daily charts. But the good part is that still we are seeing higher tops and bottoms. So that lower bottoms have not been breached in Bank Nifty so far. So that is something which is very important. If you ask me about the level, crucial level for Bank Nifty, that's 46,500 to 46,700. That's on the downside, very crucial support zone, because that was a low which Bank Nifty had made a few weeks prior.
Right. Of course, that's a call on the Nifty Bank Index. But, metals have been in focus. Metal pack was among the top sectoral gainers yesterday. And this morning as well, Hindalco will be in focus. And so will be Vedanta and JSPL. So 3 stocks put together. Which of the stocks in the metals pack, among the 3 that I just mentioned, is looking the best chartically right now?
So if we look at metal stocks, you rightly said that metal stocks are indicating strength, and also if you look at the metals per se, so they themselves are in terms of copper on LME, look at the copper prices, that's still very strongly supported by the pullback in China. So Vedanta is one good stock to look at, because we've seen some consolidation in this particular stock. So it has rallied. It has been a dream rally for Vedanta, almost breaking out above the 280, 290 levels. Currently it's around 414 plus. So the recent high, if you look at Vedanta, that was somewhere around 420 or so. So taking that out means that the next leg of rally could start, but we need to be slightly cautious, because on the daily charts we are seeing some of the technical indicators for most of the metal stocks are indicating overheating in the stocks. So we have to be slightly cautious of that. But reaching the 420, 422 levels, it could rally towards 440, 45 levels. On the downside, Vedanta has got very strong support below the 400 mark. So one can look at the stock once it reaches from a short-term perspective.
All right, that's a view on the metals pack. But let's quickly take stock of some of the queries that are trickling in this morning. Aamar, The first one is coming in on a JBM Auto. Uh, I mean, I think the charts are looking a bit fatigued, if I may say so, because over the last 6 months, we have seen a 50% uptick. Off late, we have seen some bit of selling pressure creep in. So Rajesh Veera wants to understand at what levels can one average this particular stock. Would you concur with my prognosis that the charts are looking a little fatigued after doubling in the last 1 year?
Yeah, I would say you're very correct that the stock has been consolidating. So the stock did witness a significant rally once it started reaching over the 1250 mark, and then it rallied towards almost 2400 levels, somewhere around 2420 odd levels on 19th of February, and then the stock has gone in for consolidation because the sell-off was quite sharp in this particular stock. From almost 2400 levels, the stock corrected to 1660. Currently, it's trading around the 1800 mark. So on the upside, what one needs to watch out for is 2000, 2050. So there is a potential that the stock could rally towards those levels. But on the downside, if you look at somewhere, the stock has got very strong support coming on the 1650, 1700 zone. So this is the zone which anyone who's looking at this stock, they should look at 1650 and 2050. So 400 point range is for the particular stock. If you ask me what is the trend for the stock, I would say it's trendless, it's flat, there's no trend. It simply displays consolidation, and some of the technical indicators also points towards that. If you ask me the long-term trend for the stock still remains, I would say, on positive. But again, higher levels would be sold into. So till the time we don't see it reaching the 2000, 2100 levels consistently, the stock could go in for consolidation.
All right, expect consolidation on JBM Auto, but let's quickly take up another query. This one is coming in from Jeet, and he wants to know whether one can, buy into shares of HDFC Bank and Asian Paints. HDFC Bank, of course, we spoke about the Nifty Bank Index and banking stocks, but in particular, HDFC Bank, even after a positive surprise in Q4 earnings, the stock hasn't really been able to stage a very good recovery, right? And Asian Paints, yesterday it was among the top contributors on the Nifty, positive contributors on the Nifty. So these two particular stocks, how are they looking on the charts?
See, HDFC Bank, if you ask me, it's not going anywhere. So that is very clear, and that has been clearly displayed on the long-term charts as well, on the weekly charts. So those who had been anticipating some great moves in HDFC Bank, that's really not materializing. And that will not materialize till the stock consistently, I would say, trades above the 1550, 1570 zone, because post that only we can say that there's a trend change. Otherwise, HDFC Bank isn't going anywhere. But it's a good stock from a trading perspective. So on the downside, if there is a correction towards 1370, 1360, because 1350 is a very strong base. So 1350 and 1550, that's the range for HDFC Bank. So one needs to keep a watch on. There's no trend in the stock in any time frame. So that one also needs to. So if one is expecting a sharp up move in HDFC Bank, that's not likely to happen. Looking at, I would say, Asian Paints. Again, Asian Paints also has a similar story as compared to HDFC Bank. Because if I look at the weekly charts of both of these stocks, I would say it's really surprising and striking that both of them have similar patterns on the weekly charts. That again clearly tells me that it's more of a range play in Asian Paints as well. On the downside, 2650, 2700, that's a very strong support zone, because if we go back in time in January, again, it had a bounce back from those levels. And earlier also, it had bounced back from almost 2560 to significantly higher levels towards 3300 odd. So 3400 odd. So if you ask me again, this is one stock. Asian Paints really isn't inspiring much confidence on the charts. So it's more of a trading play. So if you are into a trading range, that's fine, but don't expect it to witness a significant rally in the short term, either HDFC Bank or Asian Paints.
Very quickly, as we head into trade, in fact, head into the market open, verdict on Zomato. Numbers were good, but we saw a knee-jerk reaction coming in post earnings. I think the expectations are pretty high. So how would you be really looking at the charts now?
See, Zomato has been been a multi-bagger, so we need to understand that we have to give it a breather also. On the daily charts, it clearly shows that there is a loss of momentum, but the trend still remains up. Any pullback towards 170 odd levels is a very good 170, 175 is a good level of support for Zomato. On the upside, 215 to 20 would be a zone of resistance. So pullback towards 170, 75 can be a good buying opportunity. But you need to remember that the stock has significantly rallied, so there is a potential for a profit making.
All right, that's the view on Zomato. With that, we're getting the first tick on the market. Of course, it's a positive open, 0.2% higher for the Nifty, 22,150. We are trading comfortably above that level. Sensex up 150 points. You've got, strength in the broader markets as well. The Nifty mid-cap index is up 0.3%. Nifty Bank index heading higher, 47,800. That has been reclaimed. Of course, you'll have to see whether or not the Nifty Bank manages to reclaim that 8,000 level or not. That's a crucial level on the upside to watch out for. Let's see what the sectors are doing then. Of course, as I mentioned, the Nifty Bank index just now, autos. Let's see what the auto pack is doing. Yesterday, of course, the auto pack was dragged by a sharp cut in shares of Tata Motors. Today, it has limped back. Just about very flat, but trading with a positive bias. Let's see what the metal pack is doing. Lots of metal counters in focus this morning. The likes of Hindalco, Vedanta, JSPL, 0.5% uptick, building on yesterday's gains. Aside of this, pharma, that was the top sectoral gainer yesterday. 1.5% uptick it saw in yesterday's session. Today, flat, but still trading with a positive bias. What are the other sectors that are doing well today? Let's take a look at the Nifty FMCG pack. Off late FMCG is back in favor after good commentary coming in from management. So the Nifty FMCG pack is also trading with a positive bias. IT is also up somewhere around 0.5% or thereabouts. So pharma pack defensives are doing pretty well right now, and all round cheer in the sense that we are building on the rebound that we saw yesterday. In terms of individual movers on the index, right now, BPCL, that was among the top Nifty losers yesterday, up 1.5%, and so is Hindalco. Novelis has filed for its IPO with SEC, with the US Securities and Exchange, and that stock is up 1.5%. So is ONGC, Coal India, HDFC Life, Hero Motocorp, SBI also in the green. On the flip side, you have UPL. Yesterday after numbers, the stock was up 6% or thereabouts. Today, some bit of profit booking coming in. Although brokerages have maintained their view on the stock, and of course they have also taken note of the fact that the company is prioritizing deleveraging its balance sheet as well. Cipla, top Nifty gainer yesterday, but today it has come under a fair bit of profit booking, and so has Apollo Hospitals. Bajaj Auto, Asian Paints, Divi's Lab and Tata Consumer. These are some of the other laggards on the index. Just want to see what Airtel is also doing, because numbers are poised to come out today. Subscriber base is expected to grow by 3 million, and of course ARPUs are expected to grow 0.5% on a quarter-on-quarter basis. Africa business is also expected to see a 3% revenue growth on a quarter-on-quarter basis. That's according to Prabhudas Leeladhar. But Airtel, Aamar, how are you approaching this stock ahead of earnings?
So if I look at Bharti Airtel, this is one stock which again has been on a secular bull trend. And if you ask me, the stock is still very strong on the long-term charts, on the weekly charts. But some of the technical indicators have really moved into extremely overheated territory. So what it effectively means is that the risk-reward ratio at entering at these levels isn't really very exciting. So if you ask me what are the levels to watch, currently it's around 1300 odd levels. So any pullback towards 1200, 1210, because that's a very important moving average where the stock has taken support. Because if I go back in time, somewhere in December of 23, if I further go back in time, so somewhere in November, these levels, this moving average has taken support. So that's currently around 1200, 1210, 15. So that's a level to watch out for. Recently, the stock had made a high of 1354 and currently it's around 1300 odd levels. So I wouldn't suggest really buying at the current levels because the risk reward issue, as I said. But the trend remains very strong for this. So on any correction, this is a buying opportunity. Rather wait for some correction around these levels and then enter the stock.
What about a Shriram Finance? It's up somewhere around 4%. It will be selling its housing finance subsidiary to Warburg Pincus for 4,600 crore rupees or thereabouts. Even Valiant, the other one that holds the remaining stake, will be divesting its equity stake to Warburg Pincus. 4% uptick. Any trade here?
No, I would say this is one stock which is again in for consolidation because the stock has made a all-time high and then corrected on 3rd of May from almost 2658 levels to currently trade around the 2400 odd levels. So this is more of a consolidation in the stock. 2250 or 2200 is a level to watch out for. So 2200, 2250 is a major support zone. it's more of consolidation in this particular stock. Isn't really going anywhere in a hurry.
All right, that's the view then, not going anywhere in a hurry. That's Shriram Finance for you. Let's take up a query then that's coming in from Alex. Wants to know your thoughts on APL Apollo. Is it the right time to accumulate? That's his query. Over the last 5 days or so, it has managed to hold out in the green, but 1 month returns have been fairly muted. Should one enter now?
No, I would say you need to understand that this is one stock which is in for consolidation. And yes, yesterday was a very strong day for the stock. And the stock is really trying to say something. And because the movement has been, but it needs to have a follow through. Because many times one gets trapped by a single day move. So what one needs to understand is that the stock needs to sustain above the 1600. Currently, it's around the 1560 odd levels. So the stock needs to sustain above the 1600, 1620 level for any meaningful rally. Otherwise, it's good from a trading perspective because the stock seems to be very strongly supported around the 1450 levels, 1450 levels. So, but it's more of a range play. So 1450 and 1620, that's a range. Above 1620, then the stock has a potential to rally towards 1750 odd level. So that is a level to watch out for 1620.
All right, those are the levels to watch out for on APL Apollo. But Aamar, before I let you go, what would you be recommending for viewers, in terms of stock picks?
So I would say one can look at Power Grid. Power Grid is one stock which has been, I would say, performing exceedingly well. It has corrected, but again, it's on the move. So this is one stock one can look at. Keep a close watch on this stock. Any pullback in the stock is a buying opportunity. Consistently sustaining above 315, 320, then the stock is headed higher towards 340, 45 odd level. So this is one stock one can look at. And the other stock to look at is Tata Motors. Tata Motors did come out with its result and then the stock witnessed a sharp correction. That was more or less expected also. So this is one stock one can look at. So any breach above the I would say 980 levels, currently some 960, 980, 85 levels, and sustaining over that level, then the stock has a potential to rally further towards the 1040, 1050 level. So this is one stock one can look at. Crucial support for Tata Motors comes at around below the 940 level. So that's a level to watch out for. But more from a trading perspective, because on the daily chart we are seeing some sort of consolidation happening in Tata Motors.
All right, those are the recommendations coming in from Aamar. With that, Aamar, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us, and of course helping our viewers navigate their holdings as well. But with that, let's shift focus to the big market voice that I had promised at the start of the show. Joining me is Rahul Arora, who is the CEO of Nirmal Bang. Well, Rahul, great to have you on the show as always. Looking at the markets, last few sessions have been very volatile, which is typical, ahead of elections. But given the fact that policy continuity is a foregone conclusion now, would you say that we are favorably placed for a big up move post the 4th June verdict?
Good morning, Nandita, and thank you for having me on the show. So I don't want to specifically comment on the verdict of the elections. I think whatever the verdict is, the market will react one way or another. But I think, Nandita, by and large, we are in an environment where I think a lot of theses are getting challenged, right? I think first, we didn't think that the US interest rates would rise as high as they did and last as long as they did. A lot of people thought by now we would probably already get into a rate cut cycle, but that seems to getting pushed back by some period of time, probably maybe by the October to December quarter. And in 6 months, the US goes into elections, and there is some amount of rhetoric that's starting there in terms of tariffs for the Chinese market as well. So all things considered, I think even if you look at the earnings season here in India, it's not been spectacular. I mean, on average, I say it's been a very average sort of earnings season. So I still think we are in an environment, Nandita, where there are more downgrades and there are upgrades, and that's a bit worrisome for me. So I think there is a little bit of uncertainty. I understand there's a big event around the corner in just a little under a month. But I think even after that, and once that event gets out of the way, the focus traditionally will get back to earnings and what the rates are and where the currency stabilizes. So the biggest positive I think in all of this, Nandita, for the Indian markets is that crude has remained in that 75 to 85 sort of zone. That's made projections, at least for the government of India, very, very easy. And I think if this remains in that range, I think whichever government was to take office on the 4th, it would make their budget and forward planning a lot easier as well. So a very average result season, little disconcerting that, interest rate cuts have got pushed back to the end of the year. But I think at best, you could probably expect a range-bound market between 20,000 on the lower side of the Nifty to about 25,000 on the higher side for the foreseeable future.
All right, 25,000 on the higher side. But is there a probability that rate cuts may not happen at all this year? Could that be the big risk that we could be staring at going forward?
Well, I hope not, Nandita, to be very honest, because I think a lot of people have already factored that in. Even if it happens, Nandita, I think it'll be a very shallow rate cut cycle. So my deputy head of research and chief economist, Teresa, believes that this could be no more than a 25 to 50 basis point rate cut. Even in the US, I think, you're seeing housing rents being very sticky. And I think that's contributing to inflation as well. A lot of it hinges on the monsoons, and I think we'll have to see how that pans out. The advanced estimates are the Andaman and Nicobar might see the first onset of the southwest monsoons in just about a week from now. So that's assuring. But I think if the spread of the monsoon is good and it lasts for the full 3 months, I think with reservoir levels filling up, I think this could ease food price inflation to a very large extent. So I think that's very imperative from an India standpoint. But like I said, I think the one good thing is that despite the fact that Russia and Ukraine are still at war and you've had other disturbances in the Middle East as well, the fact that crude has not moved in out of that $10 range is fairly comforting. So we still believe that there will be rate cuts, but we think both in India as well as the United States, these may be relatively shallow rate cuts from what we are projecting at this point.
All right. Then let's shift focus to some sectors. And Rahul, you mentioned, of course, that earnings season hasn't really been spectacular. And we saw some sharp reactions in terms of stock movements as well, right? For instance, Tata Motors yesterday, 8.5% down on the back of disappointment on the JLR margin guidance front, right? But a lot of these positive triggers have played out for Tata Motors, right? Even when you look at the EV adoption or EV environment, that seems to be slowing down. And any margin expansion in terms of JLR is not happening, at least this fiscal, right? So going forward, do you see any positive trigger for Tata Motors, or do you think all the positive triggers have been baked into the price, which has, of course, given very good returns over the last 1.5 years? The journey from 400 to 1,000 has been pretty quick for Tata Motors.
So I think that applies to the entire auto sector, Nandita. I think it's been a very, very good space for investors. I think it's made a lot of money. And I think the point that you're making about margins can be extrapolated to corporate India as a whole. And I think, it's been a challenge to grow top line in India. And I think most of the earnings re-ratings that have happened in most of the sectors have been because of margin expansion. And I think now it's going to come back to top line that's going to drive growth. Specifically on Tata Motors, there was a time that nobody wanted to look at the stock. And as you rightly said, when people started looking at it, it's been a relative multi-bagger for them. So I think where things stand right now, we have to moderate our expectations from the entire auto sector. We have to look for places where valuations are relatively more comfortable. Like I said, I think if you have a good monsoon and the commercial vehicle side of the business continues to do well, I recently attended an event with, the External Affairs Minister, Mr. Jaishankar. He still talks about 28 kilometers of roads getting added every day. And if there's more work happening on the dedicated freight corridor, all of these things are going to incrementally just aid demand for commercial vehicles. I think they've turned around the passenger vehicle side. And if China was to rebound in a material way from here, who's to say that JLR cannot rebound on volume? So I think if top line grows, margins will take care of themselves. But I think we need to moderate expectations from the entire auto sector, Tata Motors included, because of the sharp run it's seen over the last year and a half.
All right, point taken. But what about the industrials theme? How are you approaching this now, Rahul? Because on one hand, you had the likes of ABB India, spectacular set of numbers, and saw the reaction as well. But on the other hand, you have L&T. Order books are steady there. But of course, in terms of margins, we've seen disappointments quarter after quarter, right? So how does one really go about playing the industrials themes now? Given the fact that for the likes of ABB India, Siemens, etc., we've already seen valuations at lofty levels right now. So what would you advise?
So I think if you look at valuations, Anita, you would never touch these stocks, right? I think they're trading at some very obscene valuations. Some of them are trading in the high 60s, early 70s as well. On FY25, even if you assume a reasonable growth rate, these numbers would at best drop down to 55 to 65 times. So obviously, if you just look at valuations, you probably won't be touching a lot of these multinational companies. But like you said, I think, see, in the case of L&T, the overseas order book has disappointed, and I think this is something that they had even guided for. And I think with what's happening on the geopolitical side, it's not something that was unexpected entirely. I think what's happening also is very quick sector rotation. And I think even within sectors, intra-sector rotation is something that's happening very quickly. And I think if I take you back just about a week, 10 days back to the FMCG companies that came out with their results, Lever did not say anything too hot and ITC. But I think if you look at what Marico, Dabur, Tata Consumer, Britannia was saying, the shift that happened intra-sector away from ITC into some of these stocks was quite remarkable. And I think probably in industrials also, you're seeing that. And I think where companies are delivering, you'll probably find a shift of money happening because, these stocks have to be owned. The other interesting part, Ananta, if you just extend it beyond ABB and Siemens, and I think when you talk about industrials, you're talking about defense, you're talking about so many other things, right? And I think when you broad base it, I think the challenge is that the stock prices have appreciated far more than revenue growth. And I think if the revenue growth and the revenue booking and order book growth is able to keep pace, then I don't see why these companies can't compound at 15-20%. Like I go back to my previous answer on autos. If you look at a lot of these defense companies, they've been multi-baggers, right? Some have gone up 5-8x. So I think if we moderate returns to about 15-20%, and if these orders come through and they get converted to revenue booking, there is a case to be made. But yeah, optically, like I said, ABB Siemens have always traded at a valuation and they've been darlings of the market whenever they've done well. But no reason to sell them if you're holding. Fresh buying, I'd say probably, there is a rethink required.
All right, of course, most of them have already turned into multi-baggers. But what about the specialty chemical space? This space hasn't really seen a good recovery or any recovery, so to say. But UPL numbers have surprised on the upside, right? The same cannot be said about the likes of SRF. So how are you finding valuation comfort in this particular sector? And should one get into it, on hopes of recovery?
So I think I'll segregate the two, Nandita. I think UPL is more agrochemicals and SRF would be more specialty chemicals. But I think, we've been very positive on the fluorination space for quite some time. I think over the last 2 or 3 years. And the theme has played out well. But we've moved from fluorination to oleochemicals. And I think, you've seen in the case of SRF what happened post the results. There is a concern about what China is doing and what the overall operating environment is presenting itself with. But I think if you look at names like, say, Fine Organics or Galaxy Surfactants, particularly Galaxy, I think we're extremely bullish on what the prospects would hold for the next couple of years. And again, I'm sorry to take you back to my previous answer, but, we were discussing defense and industrials. But if you remember the start of the lockdown, that period, say, from 2020, where the lockdown started to, say, end of 2021, the chemical companies appreciated by anywhere between 3 to 6 times. But again, the revenue had not flown through. It was just in hope of anticipation of this China plus one factor. A lot of these chemical companies are now getting close to the end of their capex cycle. So you're going to see an improvement in return on capital employed. And if the China situation eases up on certain parts of the chemical value chain, then I think you could see incremental growth coming in on the likes of Galaxy and Fine Organics. UPL stellar. I think it's beaten our numbers comfortably. I think even on the operating front, it beat our margin estimates by 200-250 basis points. But let's not forget that the stock price was up by about 7-8% yesterday. So to that extent, it's captured a lot of the short-term upside. But I think the fact that it's been such a dog for the market for a very long time, the valuations are still very, very cheap. So I think if you're taking a slightly longer-term horizon, no reason why you can't be buying into UPL this morning and holding it for a pretty long time.
All right, that's the view then. But last question really, Rahul. I want to get in your thoughts on the new age tech space, right? The likes of PB Fintech, I beg your pardon, and Cartrade have reported strong numbers. For Zomato as well, Blinkit has turned EBITDA positive. All the names I've mentioned have actually doubled in the last 1 year, right? So do you think these companies will have to do something extraordinary to see any meaningful upside from here?
So, Nandita, one of my biggest calls has been Zomato when it had dropped down to something like 35-40, and I had said that, it was probably a no-brainer to be buying it. The stock's up 5-6x from there. And I've been asked this question on your sister platforms in your network as well, whether I would touch a Zomato at close to 200. I'm not so sure right now, but it may go into a bit of consolidation. But I think the only way these guys are going to sustainably deliver returns is either they start showing you consistent profits and cash flows, or they continue to gain market share and their revenue growth is higher than the rest of the peers in that sector, listed and unlisted combined. So keeping that in mind and the fact that these companies have done well, particularly Zomato, and let's not forget, Ananta, say something like a Zomato has operated in a very good operating environment for quite some time. You had the World Cup in India last year, you went into a festive season, you have the IPL going on now, you have a T20 World Cup coming up. So it's been a bit of a dream time for some of these companies, but particularly on insurance, I think with the way the government's thrust has been in terms of, getting the whole country insured and the awareness that's rising in, there is a school of thought that instead of buying, individual life insurance companies, why not buy the aggregator? It may actually end up making more money. And to that extent, we have seen some interest in PV fintech. So I think when we talk to institutional investors, when you talk about these new age companies, the dialogue is pretty much restricted to these two names. On a relative basis, I think standing today, I think PV may outperform Zomato the next 6 months to a year. But like I said, if they're able to demonstrate, a road to profitability and sustain profitability or cash flows, then who's to say where these companies can go?
All right, really last question now, as I said earlier, but for the IT pack, I think this has been the biggest disappointment of the fourth quarter earnings, right? And everybody that I've been speaking to has mentioned that second quarter of FY25 is when the recovery could kick in. Your thoughts? Would you change your view? Would you say that the recovery would get delayed? It's best to stay away from this pocket right now.
So, Nandita, I've heard this argument for the last 2.5 years that the second half of the, fiscal 2.5 years would be better than a year and a half back and even today. My analyst, Girish, who was earlier my head of research, was anyway the most bearish on the street in terms of his projections on IT services. And he has had to revise some of his numbers lower. So, it gives you a sense of how disappointing the IT services has been. But, our job as intermediaries is to find ideas where people can make money. And I think even within IT services, if you look at, say, something like a Tech Mahindra, which is at absolutely depressed EBITDA margins, I think they've been operating in that 4 to 7% EBITDA margin range for some time. Our own call was that, that margin band that they've been operating in will probably head closer to about 13 to 15%. We were earlier thinking it will probably happen by 26, but even if it happens by 27, I think the operating earnings for Tech Mahindra could compound faster than the rest of the sector, which means for a period, not extended, but for a period, it could probably trade at a slight premium to the sector multiple. But otherwise, when you look at the guidances, even beyond the large caps, I think for the first time you saw Persistent in a long time correct quite substantially for their results as well. So no reason to turn ultra positive right now. I think discretionary spending is still a bit of a question mark in the United States. But I think if there's one name that you want to play in IT services, it would probably be Tech Mahindra at this point.
All right, that's the call on the IT pack. But with that, Rahul, I'm afraid we're running out of time. Thanks a lot for taking out time and joining in this morning. It's always a pleasure chatting with you.
Thank you for having me on the show, Nandita. Thank you so much.
Well, of course, with that, let's just take a look at what the markets are doing at the current juncture. 22,120 is where the Nifty is at. Fizzled out a bit, but the Nifty Bank Index has slipped into the red as we speak. However, the advanced decline ratio is firmly in favor of gainers. 3.5 is to 1. That's the advanced decline ratio on the NSE at the current juncture. Hindalco is the top Nifty gainer, and followed by Hero Moto, JSW Steel, Power Grid and Coal India. So metals continue their run. However, UPL, after yesterday's up move, has come under a fair bit of profit booking. Top Nifty loser, followed by Cipla, Asian Paints and Adani Ports. But with that, we've come to the end of this edition of Opening Bell. Of course, have a great day and come back and join us on Closing Bell at 3:30 p.m. But till then, stay tuned to Money Control for all your other news and updates. Thanks a lot for watching.